Greeting you, the traders, and you watch the daily market review with me, financial analyst of Grand Capital Company, Sergey Lin. And our daily heading is dedicated, as traditional, to the technical analysis of forex majors. And today is 18th of July. And okay, let's start our review and technical analysis. Okay, let's see. First pair, Euro and US dollar. So what do we have here? Further gains towards 1.2362 within the corrective euro bear flag are expected, following Tuesday's strong recovery from 1.2189. Tuesday's 1.2189 low defends the July 13 bear trap and bullish outside day low at 1.2162. And Tuesday's high at 1.2317 will come under fresh pressure. The July 10 lower high at 1.2334 and single print resistance at 1.2362 are market profile from early July, a restricted corrective upside risk. The later coinciding with the 38.2% Fibonacci retracement level of the 1.2693 and 1.2162 decline. Failure to force a break above 1.2317 would prompt a return to support at 1.2189 as a part of a larger consolidation phase. Weekly chart of year and US dollar trend is bearish. Next pair into the analysis of US dollar and Japanese yen. Resistance at 79.29 provides an upside barrier for a corrective rally from Monday 78.68 low. The broader tone remains US dollar bearish while 79.29 caps. And the push below 78.989 would bring 78.68 and the important higher low at 78.61 back into the immediate picture. The June 15 higher low at 78.61 is important because a break below 78.61 would consign the June 25 reaction high at 80.63 to US dollar bull failure status, thereby creating additional downside risk to the June first reaction low at 77.65. A sustained recovery above 79.29 is required to lift the tone, opening 79.40 and then 79.97. Weekly chart of US dollar and Japanese yen trend is bearish. Intraday analysis of Great Britain pound and US dollar. The July 2 reaction high at 1.5721 remains the main target, following Tuesday's strong recovery from 1.5554. A push above Tuesday's high at 1.5677 is expected. Strengthening last week's low at 1.5393 is in process, although a fresh wave of Great Britain pound bull pressure is required to force a break above 1.5721 and target the June 20 reaction high at 1.5777. Weakness will attract support while above 1.5605 and only a move below there would bring Tuesday's low at 1.5554 back into focus. Weekly chart of Great Britain pound and US dollar trend is bearish. Next pair, intraday analysis of US dollar and Swiss franc. Corrective downside risk has been created to the 97.15 area as a decline from the July 13 bull trap high at 0.9872 has room to extend. The sharp setback from Tuesday's 0.9832 suggests a US dollar bull flag continuation pattern is forming on the 60-minute chart, and 0.7915 coincides with the 38.2% Fibonacci retracement level of the 0.9463 and 0.9872 bull wave. Failure to break Tuesday's low at 0.9751 would prompt a recovery back to 0.9852 as a part of a broader consolidation phase. Weekly chart of US dollar and Swiss franc trend is bullish. Next pair, into the analysis of Australian dollar and US dollar. The important July 5 fraction high at 1.0330 is being challenged. As US Australian dollar bulls remain in control, Australian dollar bulls will look to act in concert to break through the 1.0330 peak to create additional upside risk to the April 27 lower high at 1.0476. Support at 1.0235 has become pivotal for the near term, and a move below 1 day's 1.0202 low would suggest a return to the July 12 reaction low at 1.0100 is on the cards. Weekly chart of Australian dollar and US dollar trend is bullish. So, my dear traders, I'm sorry, much better. So, my dear traders, it was me, in studio financial analyst of Grand Capital Company, Sergey Lin. Let's see what is happening here. Okay, as always. And I wish you the fair trends and, of course, good luck and goodbye. Don't forget to watch our daily reviews.